Aaron Kennedy here today with Evan New. We're doing Tech Teardown for Tuesday, May 6th. This week, shares of Apple have reclaimed the $600 threshold for the first time in more than 18 months. Shares are now trading at 52-week highs. Is the worst over for Apple investors? Have we finally come back?
It seems like it so far. I mean, it's been a pretty long 18 months. Been a lot of investor pessimism around Apple. During that time, I think the bears would have pointed, for when the company hit all-time highs of $700, a couple of years ago, that maybe it was too much and that wasn't warranted. But at the same time, I don't think that the valuation metrics at the time were crazy. I mean, it was trading at like 14 times earnings, which is not this astronomical.
And they're even better now.
Right. So, I mean, that being said, Apple has continued to grow over the past 18 months, albeit at a slower pace than previously. But, I mean, if you compare Apple at 600 today versus Apple at 600 18 months ago, I think investors are very definitely getting a much stronger company now than they would have back then. Just for example, relatively speaking, trailing 12-month revenue is up 13%. iPhone unit sales are up 30% on a trailing 12-month basis also. So, I mean, the price is the same, but the company is doing much better.
And you're getting more.
In some of these, you're more or less you're getting more bang for your buck in some ways. From earnings perspective, the valuation is about the same, trading about 14 times earnings. And I'd also argue that Apple's pullback wasn't due to fundamental metrics not performing well, but I think it was more about investor confidence and emotions. Apple's a very emotional stock.
So clearly you think investor confidence has definitely changed surrounding Apple stock.
I would say so. I think that the company has been very proactive over the past 18 months to do a lot, specifically to address investor confidence, which had probably been lacking for a little bit. I think the most important evidence and aspect here is this really aggressive capital return program that they've been doing. They started the capital return program back in early 2012, before shares hit 600 the first time. But they started off kind of modestly, and it's kind of insane how much they've increased it. So when they started off, the share repurchase program was about $10 million, which was 20% of the total program at that time. And since shares have been weak for so long, Apple has been, over the past 18 months, very aggressively been rebuying as much of the stuff as they can. At the end of March, they had bought back $46 billion in stock. And at this point, their share repurchase authorization has been increased to $90 billion. And now that's obviously 9 times the original figure, and that's 70% of their total capital return program. So I mean, company going out here and saying that they think their stock is undervalued is one thing, but a company going out there and
actually doing it,
putting $90 billion behind that, I think that does a lot to boost investor confidence. Of course, investors will benefit in the sense of like share earnings accretion and having more of the company. So I think that it's probably the most effective thing they could have done.
Well, so obviously the buyback you think has spurred investors' confidence. What about on the product front? Because we still haven't seen an iWatch, we still haven't seen an iTV. Doesn't seem like there's a whole lot going on there. Are investors cool with that, you think?
I think that, in 2012 and 2013, I would definitely agree with you there, that there was a lot of expectations about Apple getting into these new product categories. Of course, the Steve Jobs biography came out in 2011, all this talk about Apple TV. So all of 2012, everyone's like, hey, where's this Apple TV? Steve Jobs said he figured it out. And then 2013, it's like, iWatch. And neither really has happened yet.
Right.
So I think there was some disappointment there. Might have hurt confidence a little bit. But I think that right now, since the stock has pulled back so much, and I think expectations as far as growth goes have kind of been reset in a way. And I mean, we're now probably a little bit closer to them actually doing one of those things that people have been expecting. I mean, I think Tim Cook continues to talk about entering new product categories. So we're actually getting closer to them actually doing that too.
Well, since we've been expecting it for so long, if Tim Cook finally does say like, hey, check out my iWatch, do you think investors will just not react?
I think that some of that is priced into the stock, but some of it's not. I mean, right now, the stock is still pretty cheap, so some of these opportunities are kind of like free upside. They're kind of like call options right now. But, I mean, investors certainly expect them to a certain extent. But, again, I don't think iWatch is going to be game-changing in terms of like the revenue potential. I think it'll be a very strong product. It'll probably sell a lot of them, but it's not going to like be this thing where it's going to all of a sudden reaccelerate Apple's growth to back in this 30-40% threshold. It's not going to be that huge, but I think it's definitely it'll be a positive development whenever it comes out.
Apple's new retail chief, Angela Ahrendts, has now officially started working. Apple welcomed its new hire with a hefty grant of restricted stock. How much is she getting?
So Ahrendts has now transitioned from Burberry, where she was CEO. She received 113,000 restricted stock units that will vest over the next 4 years. Most of that's actually front-loaded, so she'll vest most of that over the first couple of years. Right now, it's valued at about $68 million. But I think this is a pretty significant it's a positive development for Apple because Apple Retail hasn't had strong dedicated leadership in almost 3 years. So, for example, going back, Ron Johnson left the company to become JCPenney CEO, which we all know
how that went.
Didn't go too well. But that was back in June 2011. In 2012, the company tapped John Browett, who came from Dixon's, but he only lasted about 6 months, and it just wasn't the right fit. So after he got fired, retail was reporting directly to Tim Cook. Tim Cook obviously is a very busy man,
He's kind of CEO of the company,
running the largest company in the world. So I mean, you can't expect him to have like full dedicated leadership for the retail division. So I think that this is very good in the sense that we'll finally get someone that can really take charge of retail and really grow it. And Aaron's does seem like a much better fit. I mean, Burberry is very similar in that it is a high-end luxury lifestyle brand. And she'll also be in charge of Apple's online store. So she's got a lot of responsibility coming into this job.
So Apple's domestic retail network has somewhat matured over the last couple of years, but where do you see growth? Abroad, maybe?
So Apple right now has about 423 retail stores globally. About 250 of them are domestic, and 40% are international. But you can tell that Apple is really focusing very heavily on expanding its retail presence internationally. If you look over the past 2 years, they've opened 60 stores total. 90% of those are international. So that's clearly where they're focusing and trying to invest all this, physical retail growth out there. 2 months ago, they opened their first store in Brazil. Last month, they opened their first store in Turkey. So, I mean, there's still a lot of room to grow here. They're also planning on tripling their stores in China over the next 2 years. Right now, they only have about 13, and China is a very big
country
place. So, there's a lot of places you can go there. So, I think there's definitely more work to be done, and I think that she's definitely the right person to do it. She did a really good job at Burberry, growing the company's presence in China, where there's a very large market for luxury goods.
There's been plenty of talk about Sapphire phones recently, mostly surrounding Apple after it disclosed a long-term Sapphire supply agreement. However, a new report says that this material might be too expensive. What's the story?
So this report, little sketchy.
Little sketchy? Where's it from?
It's from Asian suppliers tweeting on Weibo. It's a little.
You think that's just a little sketchy? You think tweets about suppliers from suppliers is sketchy? Okay.
It's only talking about though. So the report says that the rumored 5.5-inch iPhone will be supply constrained due to the high cost and the high quality Sapphire displays that Apple's putting into these things. And specifically, it says that these Sapphire display assemblies, which include the LCD, full assembly, not just the pane, will cost $280, which is compared to the current estimate of about $40 Apple pays for the Retina display assemblies. So if accurate, again, if, that would inevitably push up iPhone retail prices in a pretty big way, and also put Apple even further in the high end. But I mean, 40 to 280.
That's a huge jump, but the thing is, can Apple afford it, or should it? Is this something Apple should pursue regardless of the huge jump in price?
I mean, Apple, it's not like Apple would absorb that entirely for themselves. They could afford it in that sense, but
it would be passed on to consumers.
That's right. So that's the tricky part. So I mean, it's true that if Apple is facing this dramatic of a cost increase for some of its components, and it wanted to maintain its margin profile, it has to raise these prices substantially. And I mean, we're probably talking upwards of 50% increases on the retail price, which is kind of a huge increase for your most important product. So even if Sapphire is a better material than Gorilla Glass, which a lot of debate about right now, it's not clear in real world use and whether or not that'll hold up. But at the same time, the value proposition I don't think is going to be strong enough incrementally. Incrementally, how much better is it to warrant such a huge? I mean, can you get consumers to pay out of pocket, so much out of pocket? Or on the other hand, can you get carriers to increase their subsidies even more when they already hate how high the subsidies are? So it's kind of hard to really add all these numbers up to make them make sense. And for some additional context, most of the third-party bill of materials estimates that come out when new iPhones are released, peg the hardware costs, exclude which only hardware component at about $200. That doesn't include other costs that go into the cost of revenue. But I mean, so we're talking about, this report says the assembly itself will cost more than entire iPhones have cost in the past. Again, these numbers just don't add up.
Well, so you're saying you don't think these numbers are accurate, possibly because you got them off of Chinese Twitter. So If these numbers aren't accurate, do you have a better idea? Do you have any idea what it might actually cost?
Well, I don't know people in the Sapphire industry.
Oh, okay.
But,
no connections there.
But I mean, I've seen some of these third-party estimates that Sapphire right now, just as far as the cover glass goes, might cost $30, whereas Gorilla Glass might cost $3 to $5. But I think again, there's so much changing in the industry right now that that's not really a hard and fast number. And I mean, the high cost of Sapphire has been one of the factors that's been kind of limiting its mainstream adoption. Mm-hmm. But the Sapphire plant that GT Advanced is building has built an app for Apple in Arizona and is still kind of ramping up. I mean, the volume that we're talking about for this factory is so massive that I think that'll help bring global costs for this material down in the long run. And I've seen some estimates that GT is already selling Sapphire at 25% less than what other suppliers sell it for. So I think that they are going to start seeing some of those economies of scale realized pretty quickly, considering the scale that they're operating at. I mean, Sapphire is definitely more expensive than anything we have on the market right now. Mm-hmm. But again, I don't believe that those specific numbers, and we'll have to see if Apple can really throw its weight around and get these costs down to a point where it can actually ship these in volume.
Later this month, Microsoft will be hosting a media event. All signs are pointing to the software giant potentially announcing a Surface Mini. Do you think it's going to happen?
Looks like it. I mean, we'll know on May 20th, which is when the event is scheduled. The tagline, companies like to tease with taglines, is "Join us for a small gathering." So small might hint at mini. Surface Mini has reportedly been in development for about 2 years. And a year ago, the Wall Street Journal reported that 7-inch model in development. Last September, Mary Jo Foley, who's one of the big Microsoft reporters, reported that this would be delayed until early 2014. Right now is early 2014, so it kind of makes some sense there. Rumors say that it'll have a 7.5-inch display, have a Qualcomm Snapdragon processor, and run Windows RT. So it looks like a lot of things are kind of lining up here.
The thing is, though, once again, Microsoft is kind of late to the party. We've seen small tablets from Google. We've seen it with the Nexus 7. We've seen it with the iPad Mini. What do you think? Do you think Microsoft can catch up here? They've had to do so much catch up in mobile. And
they're still not even totally caught up yet in mobile. And I think they're definitely going to face an uphill battle as far as market share is concerned because these rivals have had such a head start. But I mean, I think it's still something you have to do better late than never because there's so much. There's proven to be so much consumer demand for tablets at these affordable price points, and this also kind of plays into some of these reports we heard a couple months ago that Microsoft is discounting Windows licensing fees down to about $15 for devices that cost $250 or less, which is most these small tablets are in that price range. So it seems like Microsoft is very aware now of that small tablets are very popular and becoming a pretty big chunk of the market. Needs to tackle that and is going to go in two ways, probably addressing through OEMs by this discounting thing and also doing it firsthand by doing a Surface Mini, which will probably be this month.
How is Surface overall doing as a business? How meaningful is it to Microsoft? Is Microsoft happy with its performance?
So the business is definitely growing, still kind of small in the grand scheme of things. So the last quarter, the company did say that Surface revenue grew 50% to about $500 million. And I mean, that's a nice little growth. I mean, they're coming off a very small base because this business is still very young, but it's starting to take some shape. Right now, it's less than 3% of total adjusted revenue, so it's still not a huge driver. But again, I think that they think that it's strategically important. But it still also runs at a negative gross margin right now. They did lose about $45 million on it last quarter. That is
not a good thing.
So yeah, not too good there. But eventually it might pay off. And again, I think part of it is just setting an example, which is kind of a strategic thing. And the benefits of that might be more qualitative. Like you're not going to measure if you can get your OEMs to make better tablets because of this thing. Like you're not going to see that reported in
numbers.
In numbers, right?
Okay. Facebook's March acquisition of Oculus VR turned a lot of heads, since the two companies seemingly have very little in common. The CEO of Oculus recently discussed the deal at TechCrunch Disrupt. What did he have to say about it?
So CEO Brendan Uribe discussed the deal. Companies have been working through the integration. Oculus immediately benefited from the scale that Facebook brings to the table as well as the financial backing. Facebook has more experience with some of the administrative type functions that Oculus doesn't have. So I think that there are already some things working out. So he's also saying that the Facebook acquisition sparked a lot of interest with big name developers that want to come and start developing for the platform, whereas back when it was just this Kickstarter project and you're going to have more indie and smaller time developers.
Got more clout now.
Right, so you get much more power in the press with making headlines because you're now attached to Facebook. So that's certainly a nice thing. But I think the important thing is he laid out this vision that Oculus does want to become a 1 billion user platform, which is obviously what Facebook would like to see happen, considering how many of these kind of platform hedge plays that Facebook has been making recently. So this is definitely a much bolder vision. I think one that is a consequence of this acquisition, because before, Oculus was very much all about virtual reality gaming and just focusing on this niche gaming segment. But now I think because of what Facebook wants to do with it, they're kind of broadening their vision to be more of just a general platform for virtual reality.
So 1 billion seems to be the magic number for these companies, if you will, because Facebook wants WhatsApp to hit 1 billion users soon. Apparently that's the special threshold. Do you see Oculus getting to 10 digits though? Because 1 billion people using virtual reality.
You sound skeptical.
I'm a little skeptical. How can you tell?
So I think there is a much lower chance of success here to getting to that huge number. In fairness, WhatsApp was already at 450 million when Facebook bought it. So now they've already hit 500 million. So they're halfway there now.
Yeah, they're halfway there.
But Oculus is literally starting at zero because their product hasn't shipped yet. It's been in development all this time. A lot of hype around it. But I mean, the reality is that there aren't people actually using this.
Sounds like the CEO is buying into all that hype. 1 billion people without a product shipped yet?
I mean, 1 billion people is like a seventh of the world's population.
Right.
It's a lot of people. I mean, the flip side is that Facebook is also paying a tenth of what it for Oculus as it paid for WhatsApp. So I think there's definitely less financial risk if this deal doesn't work out and pan out to these high hopes. But again, kind of like you said, I think that the case for mainstream virtual reality adoption is kind of limited right now. I mean, I kind of think of it similar to something like Google Glass in the sense that it's augmented reality, more connectivity, and just it's a wearable device that will they're very similar in a lot of ways. And we all know Google Glass isn't some like mainstream.
Would you argue though that Oculus or their product is wearable? Because right now it's basically like a shoebox that you put on your head.
You wear it?
Like, is that something you're gonna see walking down the street? Google Glass, I can see. I don't know about the face-mounted shoebox.
I think you're in your home, but it looks like you're outside because it's a virtual. I mean, I think it's very much a niche application.
So do you like this deal that Facebook did with Oculus?
I think that the price tag is much more stomachable. I mean, I don't know if this a billion users on VR is just, that sounds kind of crazy to me. Sounds like something out of like a sci-fi movie. But I don't think I think it's going to be really hard for them to get to such a tall order. But again, they only paid $2 billion for it, so it's a little bit more approachable in that sense. And I think Oculus will probably have more obvious routes to monetization. Not only will you have actual hardware sales, and depending on if they're going to try to make gross margin up front, whatever. But I'm sure they're going to have all sorts of ways to monetize beyond advertising. But a lot of these are games. Facebook's gaming platform right now hasn't really been growing at all. But if they could expand this into this whole new platform of content and do like in-app purchases, there's a lot more ways that Facebook can monetize this than WhatsApp, because we know that for WhatsApp, they don't charge a lot per year. They don't want to put ads in, don't know what they're going to do. But Oculus, I think there's a little bit more visibility in how they're going to make it work. Whether or not they can is probably less likely though.
I really can't wait to see Facebook make a face-mounted shoebox work. It's going to be great to watch. That's all for today on Tech Teardown. For Evan New, I'm Erin Kennedy, and we'll see you next time.